portfolio management strategy provides investors with exposure to highly diversified portfolio funds. And by funds, I mean mutual funds such as unit trusts and open-ended investment companies, as well as investment trusts. We've been managing portfolios of funds for more than 20 years, and diversification is at the heart of what we do. We look to spread risk across global stock markets, bond markets, as well as other assets such as property and infrastructure, and portfolios can be structured to prioritize either growth or income, or a combination of the two.
A central pillar of the strategy is the relationship between starting valuation and subsequent returns. This shows us that investing at lower levels of valuation can provide better returns over the long term. We apply this principle to show us which stock markets globally are currently offering attractive levels of potential returns. In addition to this, we focus on aspects of investing that we have more control over, such as diversification and costs. We're conscious that costs can eat into your long-term returns, so we use index funds where possible to minimize portfolio running costs.
So we're looking to maximize returns for investors. And the way we approach that is to come up with forecasts for major markets around the world. And we use those forecasts to help us tilt the overall portfolio. In other words, where we've got markets that are forecasting high returns, we will increase the exposure to those areas. And equally, for markets forecasting lower returns in the future, we will reduce exposure to those markets. We also want to reduce volatility for investors. So we take into account the expected risks, the overall level of volatility with each market, and use that to construct the portfolio accordingly. Finally, we decide which funds to buy, provide us with our desired exposure, and to meet the client's income or growth requirements.
This strategy is suitable for investors at all risk levels. We manage 4 risk models, starting from cautious, where the majority of the portfolio is invested in fixed income funds, all the way up to equity growth, which is 100% invested in global stock markets. By utilizing funds which are invested across hundreds of companies, we reduce exposure to stock-specific risk. We monitor portfolios carefully to ensure they are within agreed risk parameters.